the only under 30 billionaire on the planet who accumulated riches at Zuckerberg-level speed, yet somehow remains a well-kept secret. Meet Sam Bankman-Fried, the king of cryptocurrency who ironically found himself behind bars. But how did Sam Bankman ascend to his throne? And more importantly, what led to his unexpected downfall? Who would have ever thought that a crime committed behind a computer screen would have caused a monumental 110-year prison sentence? This is the story of Sam Bankman-Fried, one of the most well-kept secret billionaires of our times, whose tale will inspire yet scare you at the same time. The legal proceedings during Sam Bankman-Fried's trial were undoubtedly one of the most dramatic hearings in recent times. Despite the case's perceived complexity, the jury surprisingly reached a verdict swiftly, resulting in Sam Bankman-Fried's incarceration in less than 5 hours. There was intense tension in the air as the verdict was pronounced. The prospect of facing a 110-year prison sentence would undoubtedly unsettle anyone. How could such a big decision involving billions happen so quickly? Let's take a step back to gain a deeper understanding of this story. Bankman-Fried's upbringing was amidst the luxury of California's affluent San Francisco Bay Area, attending a school costing a hefty $56,000 annually. His lineage is steeped in academia, with his parents holding esteemed positions as professors at the renowned Stanford Law School. During his academic journey at the Massachusetts Institute of Technology, he resided in the Epsilon Theta communal residence, renowned for its alcohol-free environment, fostering a culture of beanbags, board games, puzzles, and rubber ducks. Despite this unconventional setting, Bankman-Fried admitted to a lack of focus during his college years and grappled with uncertainty about his future like any commoner. In 2014, he emerged from MIT with a degree in physics and a minor in mathematics. Interestingly, during his academic tenure, he harbored aspirations in animal welfare and actively protested against factory farming during his freshman year. However, his life took a pivotal turn after his encounter with Will MacAskill, a prominent figure in the movement, whose influence led to a significant shift in Bankman-Fried's perspective. MacAskill suggested a different path that wasn't completely black or white. He believed in philanthropy and encouraged Sam to pursue a rewarding career and subsequently contribute to charitable causes. Little did Sam know that this advice would cost him his entire life. Following his graduation, Bankman-Fried embarked on a role at the quantitative trading firm Jane Street, where he generously donated around half of his earnings to various charities, particularly those advocating for animal welfare. This marked the beginning of his distinctive trajectory within the financial realm, driven by a mission to make a substantial impact through philanthropy. After departing from his 3-year stint at Jane Street, Bankman-Fried decided to leap into riskier ventures with the aim of amassing more wealth. His attention turned to a place filled with endless opportunities and without any limits, which was the limitless world of cryptocurrencies. Sam recognized it as a potential avenue for rapid financial growth and tried to make profits under the same. His foray into this realm commenced with Bitcoin. In 2017, Bankman-Fried co-founded the cryptocurrency trading firm Alameda Research. But making money was not the only goal of Alameda. Notably, he brought in other like-minded individuals from the effective philanthropy community and purportedly pledged to donate half of the company's profits to charitable causes. An extraordinary moment occurred merely 2 months into Alameda's existence when Bankman-Fried orchestrated an arbitrage trade in January 2018, capitalizing on the variance in Bitcoin prices between Japan and the United States. This move led to an astonishing accomplishment, allowing him to rake in a staggering $25 million in Bitcoins daily. This simple yet lucrative concept led him into the crypto sphere. "I got involved in crypto without any idea what crypto was," he shared with Forbes. "It just seemed like there was a lot of good trading to do. If no one knew Bankman-Fried before, they were finally paying attention to him now."
I first started looking into crypto not because of anything to do with blockchain technology. It just seemed like a good trading opportunity. That was sort of what my background was. And there are lots of signs that it was a space that had a ton of demand and a ton of excitement and interest and volume, but not very much liquidity.
2 years subsequent to these groundbreaking developments, Bankman-Fried, in collaboration with Zixiao Gary Wang, established FTX, an exchange platform enabling users to effortlessly buy and sell cryptocurrencies. His vision of a high-tech future for finance won FTX around $2 billion in venture capital, backing at a peak valuation of $40 billion. Relocating from Hong Kong, the operational base transitioned to the tax-friendly environs of the Bahamas, a tax evasion move that many businesses resort to. By 2021, Forbes bestowed upon him the title of the richest 20-something in the world, boasting a staggering net worth of $23 billion. This immense wealth positioned him at the 32nd spot on the Forbes 400 rich list, solidifying his status as a prominent figure in the financial world. His professional success was matched by a flourishing personal life. Caroline Ellison, an American former business executive, met Bankman-Fried when she joined Jane Street full-time as an equities trader in a cohort mentored by Bankman. They forged a connection through their mutual interest in effective altruism, staying in touch over time. During her visit to the San Francisco Bay Area in February 2018, Ellison engaged in a coffee meeting with Bankman-Fried, where he pitched the idea of her joining Alameda Research. The allure of earning funds to contribute to charitable causes drew her interest. In a significant turn of events, Ellison even took on the role of co-chief executive at Alameda in 2021 and eventually assumed complete control. Despite the outward appearance of happiness and perfection, the couple was grappling with undisclosed issues behind closed doors. Ellison wasn't the happiest when she was working with Sam and even seemed to harbor discontent within Alameda before its eventual collapse. She has often mentioned to her close relatives how she was unhappy and overwhelmed at work. Furthermore, she was emotionally not at her peak either, as she was going through her intense breakup with Bankman, which left her feeling hurt and rejected. But regardless of his personal highs and lows, Bankman's professional high was a steady constant. Sam held a significant role as a major contributor in political funding in the 2020 election cycle, where he was ranked as the second largest individual donor to Joe Biden. He maintained a notable position among the largest donors to Democratic candidates and causes leading up to the November 2022 midterm elections. Sam Bankman, once celebrated as a prominent public figure, thriving entrepreneur, and dedicated philanthropist, saw all these accolades vanish in the blink of an eye due to a single misstep. What were the series of events that led him to endure one of the harshest verdicts in business history? This is where the story takes a surprising turn. Sam's trial had everyone waiting on the edge of their seats to understand the acquisitions made on him. It was a grand event. Everyone was eagerly awaiting to hear Sam's part of the story, which remained a big secret. During his trial, Bankman-Fried faced allegations of diverting funds from FTX to Alameda. The prosecutors argued that Alameda utilized the funds borrowed from FTX to settle its debts and extended loans to Bankman-Fried and other executives for venture investments. In his testimony, Bankman-Fried expressed his belief that he could create the top product in the crypto market. However, he acknowledged that the outcome did not align with his original aspirations. In September 2022, Bloomberg released a report signaling the beginning of a complex scenario. The report highlighted the close connection between Alameda Research, a trading firm led by Bankman-Fried, and FTX, a prominent cryptocurrency exchange. A few weeks later, CoinDesk provided further insights, revealing a discrepancy within Alameda's financial structure. The balance sheet of Alameda was notably filled with FTX FTT tokens, a coin developed by the exchange that offered holders discounts on trading fees. This indicated that Alameda, despite being a separate entity, relied significantly on an asset created by its affiliate rather than independent currencies or cryptocurrencies. Adding to the turmoil, Binance, another significant player in the cryptocurrency realm, disclosed plans to sell off its holdings of FTT tokens. This announcement was speculated to heavily impact the value of FTT due to its relatively low trading volume. Binance CEO Changpeng Zhao anticipated high volatility in FTT's price, and true to the prediction, FTT experienced a dramatic 80% drop on the day of the announcement. As a result, Bankman-Fried's billionaire status was compromised amid this financial crisis. The trouble escalated when the overall cryptocurrency market underwent a severe downturn. Leveraged investments within Alameda collapsed, leaving the company unable to repay its debts to FTX. This led to massive losses, including customer deposits. In a single day amid the run on FTX assets, Bankman-Fried saw his net worth collapse by 94%, the biggest one-day loss by any person tracked by the billionaire index. Prosecutors framed these financial maneuvers as excessive borrowing, amounting to what they termed unlimited stealing. The culmination of these financial complications led to a drastic decision. FTX, Alameda Research, and over 130 affiliated legal entities declared bankruptcy on November 11, 2022, signifying a significant fallout from the financial turbulence that ensued. Consequently, in December 2022, Bankman-Fried faced arrest in the Bahamas and was charged with various counts of fraud. Pleading not guilty to these charges on January 3, 2023, he encountered further legal complications as 4 additional criminal charges were announced on February 23, 2023. The trial, which commenced on October 3 at the Manhattan Federal Court under the supervision of Judge Lewis Kaplan, revolved around 7 counts of fraud and conspiracy, depicting the gravity of the situation arising from the chaotic developments in the cryptocurrency domain. Why would a young billionaire running the world's most successful startup risk illicitly borrowing billions to fund risky crypto trades? Natalie Tien, his former assistant and spokesperson, said neither side's arguments fitted the man she knew. "He did lie. He did take the money, but I don't think it was about greed," she said. "I think he was aiming to play a more significant role, a bigger game in his mind, and was taking those actions to achieve that goal. Perhaps he genuinely thought it was for the greater good." Bankman-Fried attempted to convince the jury that he believed Alameda had unrestricted discretion over the borrowed money, asserting it could be used for any purpose, even as mundane as buying muffins or covering routine business expenses. He acknowledged an oversight in assessing the scale and risks of borrowing, realizing this misjudgment only when it was too late. In an interview hours before he was arrested, Sam opened up about his mistakes. Although admitting to mistakes in managing FTX, Bankman-Fried vehemently denied the accusation of embezzling at least $10 billion of his clients' funds. Prosecutors contended that these funds were directed toward high-stakes wagers within his hedge fund, Alameda Research. The severe decline in the crypto markets resulted in a substantial financial shortfall, creating a crisis. U.S. Attorney Damian Williams swiftly issued a statement following the verdict, emphasizing its message to all fraudsters who believe themselves untouchable. He underscored the timeless nature of fraud and corruption, pointing out that while the cryptocurrency industry might be relatively new, the nature of these crimes remains as ancient as time itself. Williams emphasized that individuals like Sam Bankman-Fried might be new players in the scene, but the criminal acts are entrenched in history. Sam Bankman-Fried will be sentenced on the 28th of March 2024. In a whirlwind journey from crypto stardom to legal turmoil, Sam Bankman-Fried's story serves as a cautionary tale to many. Could this case mark a turning point in how we perceive accountability and compliance in the cryptocurrency realm? Or will Bankman-Fried's trials impact public trust and investment in cryptocurrencies? Let us know what you think in the comments down below. And don't forget to like, subscribe, and hit the notifications bell. See you in the next one.